Hey, there he is.
Welcome back, folks. I'm trying to do all this multitasking. Hold on. Got to get going on Facebook. Got to share this video. Share. All right.
Ooh, update your Instagram. Don't forget that.
No, my.
Don't lie, Jason.
My
You
MySpace.
were TikToking.
I was not talking.
You were TikTok. Yes, you were.
He was MySpacing is what it was happening.
Yeah, spacing out.
He's still spacing.
All right, folks. You're welcome. This is U.S. Home Talk. We're live every Wednesday, usually right at noon, sometimes a minute or two after, depending on how much amazing content we have to deliver to you. And today we're going to be talking. Boyd. Jason Walgrave is my name. I'm with Walgrave Real Estate Group and the Minnesota Real Estate Team at RE/MAX Advantage Plus. We've got the great mortgage Michael Overson with Luminate Home Loans. We've got the realtor, the greatest realtor in the entire Sioux Empire area, Marcus Walgrave with Hague Realtors. We've got Evan, who without Evan, folks, we wouldn't even have a show. You just have three brilliant minds staring into a screen for an hour every Wednesday. Thank you, Evan.
Talking to each other.
Three brilliant minds. So who's the dumb one?
Well, then
he's saying if you weren't part of it.
If you weren't here,
part of it.
I mean, with you being here, you're the fourth. It's
Fourth.
like the four amigos. It's like the four amigos.
If it was just us three, it would be three guys talking about mortgages and real estate, thinking they're on a podcast.
Yeah, exactly.
But it's just us talking to each other. We're like, yeah, we got all these shows. We start talking to all these people. Yeah, we got this podcast. We got all these shows out there, and they search for us. They can't find us.
Nothing.
Just nothing there. They're like, that's why you're here, Evan. We definitely appreciate it.
We do. We appreciate you, Evan. And we appreciate, folks, anyone who's tuning in live or later in the week via all of the podcasts or streaming platforms. This is U.S. Home Talk. Best way to find us anytime is ushometalk.com. You can connect directly with Mike, Marcus, myself, Evan. All of our fantastic show partners are on that website as well. Our past shows are there. Dozens of reports on buying, selling, investing in real estate. It's I'm really happy with the website. We rebuilt it last year. It's great. It's incredible. Check it out, ushometalk.com. You can ask us questions, make comments during the show via Facebook or YouTube. However you're tuning in, you can text in your questions to our real estate hotline number, which during the show, text us those questions. Any other time, it's a 24-hour real estate hotline number, and that is 612-234-7585. Go ahead and text us your questions, anything and everything real estate related. Or fishing related. Marcus and Mike are actually very, very good fishermen. So if you have fishing questions, we'll take those as well.
I mean, I think I'm better.
If you guys were in a fishathon or a fish off.
A fishathon.
Is it what do they
A
call
fish
it?
off?
Fish off?
Fish off.
Is that
who would win that fish off? Marcus? Yeah.
I think it depends.
It's like a fish fry, but like catching the fish. Who's going to catch the most fish?
Are we
Probably
ice fishing
Mike.
or open water fishing?
Mike fishes from a boat.
I'm talking
and
right
that's
now.
kind of key.
You talking
That's it,
right now?
Mike.
No, we got to have the same. We got to have the same tools, right? Either you're both on a boat, or you're both on the shore, or we're in not winter, not a.
It's a tough one. It's a tough call because I don't care how good you are at fishing. Sometimes beginner's luck is a thing with fishing, right? I can go out, I can bring someone on my boat to go fishing, and it's like, I haven't been fishing for 10 years. This is great. And I've been fishing every day for the last 7 days in a row, and we go out there and they outcatch me. and we're using the same lures, using the same stuff. So, I don't know. I think it can go either way. It's a coin toss.
It's a coin toss.
That's what I think.
Well, we're going to have to try it next year.
I'll give it to Mike.
Next summer we're going to do it.
I see what he's posting. He's the fishing slayer. So
see what Marcus, what you know, here's what Mike does, which most people don't know. He goes out fishing, and when he goes out there, he has like seven or eight different like outfit changes. He catches one fish.
I catch one fish.
Takes all these different pictures in these different outfits, and then throughout the year he posts. It's the same fish, just a different outfit, same day.
Different background, you know what I mean? So it's like, okay, let's put the island in the background, and let's get this group of houses in the background. Let's get that in the back. It's the same fish. Yep. I'll be like, oh look, I caught 6 of them today. No big deal. Same fish.
I thought
6
maybe
different
you bring them home and you keep them, and then you just bring the fish out there with you on the boat, and then put them on the hook. Like, I caught it.
Like my pet tiger muskies, I just keep them as pets and then take them for a walk. You know, throw them on a line out there, let them swim around a little bit, and then tug of war them back in, and they got their exercise for the day.
Hey, got one. Why does it have a leash?
All right, folks, what are we talking about today? We're talking about mortgage mistakes. Mortgage mistakes to avoid. Overson, would love obviously your input because you're the mortgage genius. Marcus, would love yours as well. So let's go through this list. Mortgage mistakes to avoid. That's what we're talking about. Number 1, not checking your credit score. How important is your credit if you want a mortgage?
Credit score and credit profile, very, very important, right? Most loan programs, the interest rate that you get is going to be based on your credit score. Conventional loan programs, the mortgage insurance you pay is highly dependent upon your credit score. I ran an example the other day, and this is an extreme case, right? So I was looking at a 5% down loan, right? And I compared someone with a 620 score versus someone with a 780 score. And this was like a $600,000 house. So it was up there a ways, right? So the mortgage insurance for the 760 credit score borrower, 780 credit score borrower, with 5% down on a $600,000 house, it was like $121 a month. Okay? Pretty cheap on a $600,000 place, right? That person with the 620 credit score, guess what? How much that was going to run that person?
$320.
Sure.
$898.
Oh!
For a 620 credit score, 5% down on a $600,000 house. $898 a month. Right? That shows you how crazy costs can change for someone based on credit score. Right? That was the only difference was the credit score. So, so be careful, right? So be conscious of that, right? If you are going to be in the market to buy a house anytime in the next 2 to 12 months, and if you have any sort of hesitation or questions or something about anything that's on your credit, right? I think my score might be low. I think this thing might have popped up. I forgot to pay a bill. Did that pop up on there, right? Get an application filled out, get your credit pulled. Let's see what's on there, right? And if we have time and a plan in place, we can get you back to where you need to be, or you're just going to get that peace of mind as like, oh, my credit's just completely fine, right? Green light, let's go shopping.
Mike, what did you say that first one was? The one with the 780 score?
It was like $121 a month.
So it was like almost 7 times more with that 620 credit score.
Yep.
Is that about the same kind of multiplier in terms of like if somebody wanted to do like the one-time payment of the PMI? Are we kind of looking at the same thing? Like,
yeah, it'd be super
7
expensive.
times more. Yeah,
it'd be like 7 times more. And here's the thing: if you have a 620 credit score with 5% down, the one-time mortgage insurance payment goes against the government rule of 3% points and fees. So the government has a rule out there that says the fees on a loan can't be more than 3% of the loan amount. Okay, if you do a one-time mortgage insurance payment, that one-time mortgage insurance payment goes against the 3% fees. So I can tell you right now, it would be impossible to do a one-time payment with a 620 score at 5% down, because you're going to be paying 5, 6, 7%, right, of your loan amount as a one-time fee to pay that. You're obviously well over the 3% that's allowed by the government.
That's wild.
So
I mean, that's such a huge number, man. Oh,
it's
man.
a huge number, and that's where FHA comes into play, right? So guess how much the cost is on an FHA loan for that same scenario, a 780 borrower versus a 620 borrower.
It's the same, isn't it?
It's the same for both because that's what FHA does. It doesn't rate mortgage insurance based on credit score. It's a government-backed loan, and the government wants to have an even playing field. So everyone's going to pay the same amount of cost for mortgage insurance on that FHA loan because the government provides the mortgage insurance on it. On the conventional loan, it's private companies. Private companies are all about risk and reward, right? So the lower the credit score, the higher the risk that you're going to default. So now we got to charge you more for that mortgage insurance just in case you go into default on that loan.
Yeah, makes sense. Folks, we're talking about mortgage mistakes to avoid. Number 2 on our list, applying for new credit alongside the mortgage. Marcus and I have these, and Mike, you do too. We have conversations with this all the time with our buyers, and it's, they're getting excited about buying a house, and okay, well, let's get them with Mike and get them pre-approved, and and maybe we start looking at some homes, and then we need new furniture, and let's go apply for some, some deals at the furniture store, and so they're applying for different types of credit, so they have inquiries. How does that affect your credit? How does that affect the mortgage process?
Perfect example. Literally just closed a loan yesterday where this came up. Okay, situation. Husband and wife are divorced, right? They're still living together in the house. They're selling that house. She's going to go off and buy her own place. He's going to go off and buy his own place. She's buying first. Well, the daughter's car went bye-bye, right? Daughter's car broke down and they have to get a different car. So right in the middle of the loan process, she went out and she co-signed for an auto loan for her daughter. Didn't reach out to me, just went out and did it, right? Well, now she has a $375 payment that is showing up on her end, and that is making her debt-to-income ratio go over 50%. Now she doesn't qualify. Okay? So we're 2 weeks away from closing. It's like you don't qualify now because this payment came up. It would have been an easy call to me to say, hey, look, my daughter's car just went down. We got to finance something for her. What's the best way to do this? I would have said, well, put it in the ex-husband's name. Right? He's not looking to buy a place right now. You are in the middle of a contract. If you add this payment, you're not going to qualify, right? So, but that call didn't happen, right? So now it's like, all right, now what do we have to do? Now the ex-husband has to go out and get a loan in his name and co-sign on that with his daughter. So the loan is in his name and not her name. Well, takes a little time to get that loan through, pay off the old loan, get the documentation, whatever. We had to delay closing by 3 days. Right? Because of that, because we had to wait for all this stuff to go through where it all could have been avoided with one phone call, because I would have recommended, well, just put the loan then in the ex-husband's name so it's not going to mess with your house purchase over here.
Mm-hmm. Yep. Solutions, man. That's what you are, Overson. I love it. Folks, we're talking about mortgage mistakes to avoid. Number 3 on our list is failing to look at the total housing payment. And so I think a lot of times consumers, they go on different websites and it's, they've got mortgage calculators, but those mortgage calculators, you gotta look closer. What does it include? A lot of times when advertisements are out there, they're advertising principal and interest. But you got to calculate in your taxes and your insurance and your mortgage insurance if that's a part of your deal, right? And so make sure you're looking at the total payment, including all 5 of those things, not just the principal and interest payment on your mortgage.
I was going to say HOA dues comes into play, right? You got someone looking at townhouses or condos, right? So I say, hey, look, you're pre-approved. You can buy, up to $300,000 at the price range of $300,000, right? But if there's association dues involved, I got to say $300,000 as long as your association dues are $350 or less on that thing. If you go out and you find a condo at $300,000, but the association dues are $700 a month, you don't qualify for that because that $700 association fee is kicking your debt to income ratio over, right? So it's one of those things where when you got to look at when you say look at the total payment, it's all those things that come into play. And just because you went to Spaceship Mortgage, not going to say their name, but there's a spaceship involved or something, and they say you can go buy a $350, and then all of a sudden you get 2 weeks down the road, and they're like, oh, you don't qualify anymore. Well, what happened? Oh, you bought a place with association dues of $500, but you're only approved for association dues at $250. wow, that would have been nice to know up front, right? So be careful with that.
Yeah, I've run into this a few times recently with insurance as well, where people are not factoring in, oh, yeah, I can get a house that's about $300,000 or whatever, and then, oh, the roof age on that home is 20 years, so actually the two carriers that will take it, you're paying 2 or 3 times what you expected on insurance, and it completely breaks the budget.
Yep.
Evan, I think
Gotta
that's
look
a
at that.
great point. I think that's a great point. I think when we do look at these mortgage calculators, they're getting nice. I mean, there's a couple websites out there that have it all. They're like, hey, is there an HOA? Let's talk about insurance and even like some utility costs in there too, to really give you the big picture, especially if you're coming from like a rental position. But the insurance, I mean, even and myself being a realtor, I'm like, I know what my insurance is, and I'm guilty of it, just assuming like, well, this is what I have on this house, so probably going to be about the same, on the next one. I mean, the other one's maybe 10% more expensive house, so I'll just add 10% to that, and we'll call it goods.
Yeah.
There's so many rating factors, and I know that I've encouraged realtors I've worked with, Jason included, that it's like roof age is super important right now. Oftentimes you'll see on a listing, like the MLS, the age ratings are essentially over 8 years or under 8 years, but over 8 years leaves a lot of room for, is this house even like insurable under standard insurance? Because a 25-year-old roof right now is like you're going to surplus markets pretty much. Mm-hmm. And we don't run into that too much. Most people are replacing the roofs every 10 to 15 years here in Minnesota, but that's why the rates are so high. So
Good to know.
Cedar shake roofs. How are those these days?
Yeah,
Evan?
there you go. There's also the fun and spicy stuff. Cedar Shake is like, yeah, cool. We have one carrier that will do that.
Yeah. And
Even if they're brand new?
Oh yeah, Cedar is something that most carriers just don't want to get involved with.
Yeah.
I just had a client
Interesting.
that was the deal killer. $550,000 house in Bloomington, cedar shake roof. Couldn't find. Her girlfriend worked for State Farm. Pulled every string. State Farm wouldn't do it.
No.
They found 2 carriers that would do it. One was like $10,000 a year,
Yep.
and the other one said, "We'll provide insurance on there, no roof coverage."
Yeah.
So if the roof goes down, you're replacing it on yourself. We're just not going to touch it, but we'll insure everything else. You're not going to have any roof coverage with us.
Yeah, that'd probably be a surplus market. I think Cincinnati used to cover them, but they may have backed out of that market recently. I'd have to double check. Honestly, we don't see that many cedar roofs in Minnesota. Maybe for good reason. So it's one of those areas that we don't have to tread into very much. I am seeing more metal roofs, which makes me really happy. That saves you a lot of money in the long term, both on roof maintenance and on insurance. So if you're shopping for a new roof, consider metal.
So metal. What's the life expectancy on metal roofs?
50 years.
50.
Like 50 years actual. Like asphalt shingle, a lot of them are rated 25, 35, 45 years, but they never last that long. Metal roofs will actually last 40 plus years.
Wow.
So,
That's solid.
I think of all the metal roofs on our old barns that
Oh,
that
yeah.
were at the Grandpa Walgrave's house. We slapped some metal up there, and with the exception of maybe poor installation, burying a screw too deep and smashing the rubber washer. I mean, nothing's really going to stop those bad boys. So
No, those roofs lasted 300 years.
yeah,
300.
it's impressive.
And I saw it firsthand. That roof was there 300 years later.
They went
I
back
remember
to
installing
before
that.
the foundation of the United States of America.
Yes, before
They're
Columbus.
that
way
good.
Before.
So I got.
All right, folks, talking. Oh, go ahead, Mike.
I was gonna say, so I got another thing about insurance because this just came up on another file here. This is a gripe of mine. Okay, out of state loan officers, right, putting loan estimates together. Right, here's your closing costs. So I'm working with a client right now. $500,000 house. It's weird. However, example that I use is 500,000. Right, $500,000 house. Okay, this loan officer from Virginia was quoting that it was going to cost him $115 a month for homeowners insurance on this $500,000 house. Okay, that's $1,300 a year. Okay,
nice.
so $1,300 a year. I was saying, look, I'm going to say it's going to be closer to $250 a month, which is $3,000 a year. And I'm still probably short. It's still probably going to be 35 to 4,000 for this house, right? So what does that do? So he was saying, well, this guy in Virginia, his closing costs are $2,000 cheaper than yours. And I said, well, he's quoting you $1,320 a year for insurance. I'm quoting you $3,000 a year, right? That's your $2,000 difference right there. I'm actually being realistic on what your insurance is going to cost you, and he's not. Right? You're going to get to closing, or you're going to get your insurance policy a few days, 10 days before closing, and your insurance agent is going to say this is how much it is, and your bottom line is going to go up by $2,000.
Yeah.
So do you want to work with someone who's realistic up front, or do you want to work with someone who's just trying to play some games with the numbers to get your business?
I see that a lot in the insurance calculations for, any of the base, like you go on Zillow or whatever, and it has the calculator where you plug things in. The default number for insurance seems to be nationally based. It's a little bit of an overestimate, but I would just start with 1% of the home's value. It's going to end up being a little cheaper than that, but that will put you in a more realistic headspace than a lot of them where it's like 1/4 of 1%, and no, it's normally somewhere around like 0.7, 0.8%. So,
and that's the problem. Like in Virginia, maybe that's what it is, right? They don't have
totally.
they don't have the hailstorms, they don't have the winter weather, they don't have all this stuff in Minnesota that we do, and that's why roofs fail sooner and all this other stuff fails sooner because we have extreme weather up here. So maybe in Virginia that $500,000 house only costs you $1,300 a year. Here in Minnesota, you're $3,000, $3,500 all day long.
Totally.
Folks, we're talking about major mortgage mistakes to avoid. Next on our list is not seasoning your assets. Maybe you have cash. Maybe you've got some things that you're going to sell for cash, or you've got cash of gift or whatever it is. Mike, what does it mean not seasoning your assets?
So let's say you have funds coming in from an outside source. Let's just even say you got a stash at home, right? You got a safe at home. You got 10 grand sitting in that safe at home, and you're saving it. It's just cash you built up, right? It's like I've been saving my birthday money since I was 8 years old in this thing, right? And now I'm 30 years old. I'm going to go buy a house. I got 10 grand of cash sitting in there. I'm going to use that 10 grand to buy this house, right? Can you just bring straight $100 bills to closing? No, you can't, right? Can't do that. So it's like, okay, well, I'm going to take this cash and I'm going to go deposit it in my checking account because now it's in my checking account and I'll bring a check to closing then. Well, that's great. But when you go through the loan underwriting process, right, the underwriter is going to see this deposit of $10,000 go in and be like, hey, where'd that $10,000 deposit come from that I'm seeing here? Oh, it was cash sitting at home in my safe. Well, can't document where you got that cash, right? You can write a letter saying I've been saving birthday money or whatever it is, but you can't document it, right? It didn't come from payroll from your employer. It wasn't an IRS refund check that you got or something like that from income taxes. It was just cash, right? So underwriter's going to say, sorry, you can't use that 10 grand because we can't document where it came from. So if you have cash that you're going to be using and you want to season it so you can use it, you got to get it into your bank account and you got to let it sit there long enough, typically 60 to 90 days, so that when underwriting gets your bank statements, it looks like that cash has been sitting there forever because they don't see the deposit going into your account. It's got to be in your account and you got to let it season, and then you get bank statements down the road to show that you got the 10 grand to use for closing.
Love it. Love it, folks. We're talking about major mortgage mistakes to avoid. This is what you want to avoid. Next on our list, job hopping. Mike, we're closing in 3 weeks, and I think I'm going to take this new job.
Can be an issue, right? Depending on what your job is now and what your job is that you're going to. For example, let's say you're self-employed now, right? You're a self-employed financial planner, right? You have your own financial planning business, but a big firm, Ameriprise, says, hey, we want to hire you, come in and be a financial planning manager of these other financial planners we got here. We'll give you a base salary of $200,000 a year, and then you get like some commission off of them. Well, being that you're going from self-employed to the W-2 employee now with a guaranteed salary, that's fine. We can use that guaranteed salary of $200,000 a year to qualify, and as long as that's enough to qualify for the loan you're trying to get, no problems, no issues, right? But let's say it's the reverse. Let's say you've been a financial planner for Ameriprise for 10 years and you want to break off and start your own business. So you're going to break off and you're going to start your own financial planning business here, and that's going to start next month, just a week or two after your closing. Well, that's going to be an issue because in order to use self-employment income to qualify, you got to have a 2-year history of it. So you're not going to have a 2-year history of it when your closing comes around because you're literally going to be brand new self-employment. That's going to kill the deal.
Folks, talking about major mortgage mistakes to avoid. Next one on our list, not getting pre-approved. And we talk about this all the time, whether you're thinking about buying in 5 weeks or 5 months or 5 years. We want to get you in to meet with Mike right now to get that pre-approval done, to know what options you currently have and what options you could have if we made some changes.
Yeah. How many people do you guys take out on showings that don't have cash, right? So they have said they don't have the cash to buy the house with cash, right? And then they also say, well, no, I have not been pre-approved yet. How many showings do you guys go on?
0.
Is that a big number, Jason? Or you're like, that's a big number? No,
It's a big 0.
it's a big 0, right?
Big 0.
So, in order to even make an offer in a house, you got to either have proof of funds, proof that you have the cash and you don't need a loan, or you got to have a loan pre-approval, right? Before you even go out there looking at houses, you got to have one of the two. For those who don't have,
is it required? No. Highly, highly, highly recommended.
right? How many real estate agents will actually show you a house without one of the two? I mean, right?
And if they are willing to show you it, then you should probably question that.
right? Because here's the thing. They don't want to waste your time, right? Looking at a house you might not qualify for. It's like, so, right? If you don't qualify for this house and you fall in love with this house, now that home buying experience is a little bit tougher, right? Because now you have this expectation of, I like that house, I want that house, but now I don't qualify for it. If you shouldn't just go look at it, just don't go look at it before you put the horse in front of the cart there, because it changes your buying experience, is what it does. So getting pre-approved is huge, because it literally lays the foundation for the rest of your home buying process.
Talk about a massive disservice to your client to say, yeah, let's go look at houses. I mean, you're kind of making the point, Mike, of, hey, you fell in love with one. It's the whole experience of buying a house is memorable, and it should be very pleasant, and will set the foundation for having incredible success in real estate down the road. So if your first experience is going out, falling in love with these houses, finding out that you overshot your budget by $50,000, and then you go look around, and yeah, I mean, they're still nice houses, but there's a big jump between a 300 and a 350. And if that's you going in there thinking that this is what you're going to do, and then all of your hopes and desires are crushed, it's like, well, that person is going to be so bummed out. Well, likely even just walk away from it and be like, now is not the time, and just may never get into it. And it was just a first experience situation where if they would have started out at their budget, maybe even a little bit below it, just to make sure that if they fall into a love of the property that has some competition and they might need to, get aggressive with it, and they're still within their budget, now you're talking about somebody who said, hey, that was a great experience. I can't wait to save up and to do that move up purchase in that 5-6 years down the road.
Yep, definitely. Folks, we're talking about major mortgage mistakes to avoid. Next on our list is not asking questions and not being forthright with your loan officer.
Yeah,
Mike, how important is this?
I just recommend if you even if you don't think it's important, I get a lot of people it's like, you probably don't even need to know this, but blah, right? But blah. I have this side business. I made I have this side business that I don't even make any money on it, right? I don't even, so it's so I didn't put it on the application, but I do have this thing. That's great because if you show a loss in that side business on your tax returns, we have less income to use now. So I'm glad you brought that up, right? Or it's like, hey, I'm going through a divorce, or you know what, we're getting married. Like a unmarried couple comes in, gets pre-approved. We're in my house. Hey, we have a wedding date set before our closing. Well, if you change your name when you get married, now there's additional documentation we have to get for that name change to prove that the person over here, right, is the same as the person over here after the marriage. So little things like that, even if you don't think like they don't need to know that, or it's not a big deal or whatever, there's no stupid information that you can bring up. Tell your loan officer everything. That person will pick and choose what they need to use to make sure that you have a good experience and a smooth experience all the way to closing.
Folks, talking about major mortgage mistakes to avoid, we've got 2 left on our list. The next one is not filing your taxes. How important, Mike, is it to file your taxes if you want to get a mortgage?
Fortunately, unfortunately, however you want to describe it, the government is involved with mortgages. They just are, right? And a lot of these mortgages, whether it's FHA or VA or even conventional loans, because Fannie Mae and Freddie Mac are owned by the government, right? So conventional loans, they all work their way to the government, right? So the government sets these rules. They know if you owe the IRS for income taxes, right? They know all that stuff. And so they make us prove that you guys are basically up to speed and you don't owe the federal government any debt. So if you haven't filed your taxes, they don't know if you owe the government money or not because you haven't filed your taxes. So it's going to come up along the way, and then you're going to have to file your taxes. And now if you owe the government taxes or the IRS taxes when you file those tax returns, now there's additional money you have to come up with, right? Because you either got to pay the IRS off in full or come up with a payment plan and start making payments on there. Well, now this payment plan payment, let's say it's $200 a month, that acts like any other debt, right? A car loan, a student loan. It's another $200 payment you have to make. Goes against your debt to income ratio, and it can affect how much you qualify for.
Folks, talking about major mortgage mistakes to avoid. One last one on the list. And folks, I do appreciate however you tuned in today, whether it's live or later in the week. Be sure to check out our website, ushometalk.com. It's got all of our contact information, all of our past shows, and you connect with every one of our show partners, ushometalk.com. Our real estate hotline number during the week is 612-234-7585. Again, our real estate hotline number is 612-234-7585. Drum roll, please. The last on the list of major mortgage mistakes to avoid: not using Mike Overson at Luminate Bank.
Biggest mistake you can make, right? If there's one mistake to avoid on this list, if you just had to pick one, I'm guessing
That's the one.
That
is the number one. No, but in all truth, Mike, you and your team do a phenomenal job. Top tier level of customer service. Your processes are dialed in. But what's impressed me most throughout all the years that we've been doing this together, which are a lot of years, is your ability to solve a problem. And figure it out, and that might mean, for some borrowers and buyers, it might mean we needed a little bit more time before we can get that mortgage. But you are a solutions guy. If you want a mortgage, go to Mike Overson.
Yeah, I would say that's probably been my strongest point, right? Is figuring out there's a puzzle there, right? To getting this buyer to the closing table is a puzzle, right? Some puzzles are only 5 pieces. Super easy to put together. Mm-hmm. Boom, puzzle's there. You're going to closing. Some puzzles are the 1,000-piece puzzle, right? That has a lot of moving parts, right? Takes a little bit longer, right? It's going to take some brain power to figure it out, but there's usually a solution, right, to get there. So it's here's the pieces of the puzzle. How do we get this to fit? I would say that is probably one of my stronger points for sure. And Marcus agrees.
I totally agree.
We do
agree.
appreciate you tuning in today. This is another.
I think Jason's internet is bogging down a little bit. She's a little delayed.
You gotta turn the crank. Turn the crank.
Get the hamster some water to start running on that wheel a little faster.
Good grief.
Feed the.
All right, folks. We do appreciate you tuning in this week. We will be back next week, same time, noon on Wednesday, live on Facebook and YouTube. This has been another episode of U.S. Home Talk, and we hope you have a great week.